Hey everyone, here's your quick afternoon market update, and I will be covering the US dollar, crude oil and gold. So let's dive into the big stories shaping the markets right now. So last Friday, Moody's downgraded the US credit rating to AA1, citing the rising debt levels and long-term fiscal concerns. And this downgrade comes at a tense sentiment, especially with the Trump administration pushing a massive new tax cuts package estimated to add 3 to 5 trillion in debt over the next decade. And the markets reacted quickly. The US Treasury saw a slight sell-off, while the stocks and the dollar came under pressure. The 10-year Treasury swap spread take up to 54 basis points, still below the April's high of 60, but signaling stress. And looking ahead, the US economic data is light this week. But several Fed officials are set to speak, and the traders are pricing in 2 rate cuts later this year, starting in September. And also, keep an eye on any comments about the currency in trade talks with Asia or at the G7 finance ministers meeting on Tuesday, which could also impact the dollar sentiment. So next, about WTI crude oil. The oil futures edged higher on Monday, supported by the geopolitical tensions. The headlock in the US-Iran nuclear negotiations is the key factor. Iranian officials made it clear, unless the US drops its stance on uranium enrichment, the talks aren't moving forward. That means that the sanctions will likely stay in place, and the expected return of 300,000 to 400,000 barrels per day of Iranian crude may not happen anytime soon. But still, don't expect a major price rally just yet, because Moody's downgrade of the US has dented global risk appetite, and weaker than expected economic data out of the Asia is also cooling demand expectations for oil in the near term. So now let's talk about gold. The Moody's downgrade is shining a light on the US fiscal risk, with debt levels projected to hit 134% of GDP by 2035, which is well above the post-World War II peak. Investors are watching closely. And normally, rising interest rates and a stronger dollar would pressure gold. But with growing geopolitical uncertainty and a shaky fiscal outlook, the gold is making a comeback as a safe haven asset. We have seen this play out before, like after the S&P downgrade in 2011 and Fitch in 2023. And the stocks took a hit, but gold surged. If fiscal promises don't turn into action, gold may stabilize and even rise further. Some analysts are calling this the start of the golden age of trading. So that's all your quick market roundup. Watch the headlines and stay informed and trade smart. I will see you next time.